One of the largest waves that have hit this market in the last 12 months is the institutional DeFi movement. And it continues to become a much larger topic on this channel, especially as we do get closer to 2025, because we are about to witness a major shift in the overall landscape of crypto, especially within the US, which is going to open the floodgates to the institutions. And in this video, I really want to address how Hedera is perfectly fit to handle a lot of the scale, the volume, and just the opportunity that presents with institutional DeFi. So with that being said, welcome to the channel, everyone. My name is Nick. For those that are new to the channel, hopefully by the end of this video, you do become a subscriber. And if you guys are not in the free Discord, you guys should be. Going down in the description below, there is going to be a link down there to the free Discord. What are you guys waiting for? Join up. There's over almost 10,000 additional members in there. So definitely join up. You guys won't regret it. Now, with that being said, the overall market is sitting pretty at about $3.75 trillion. And as we do really kind of look at that, right, a lot of this market is currently tied back to DeFi. If we go over here to the DeFi section, we're sitting at about $177.7 billion in market cap, $15.6 billion in terms of trading volume. But look at the projects tied to the DeFi market. And of course, Hedera is one of them, sitting at about roughly $10.9 billion in market cap. But what about Chainlink, right? We talk about Chainlink here and there on the channel. It is a blue chip. I do have this included in the Discord as a low risk play because Chainlink is one of the largest players in this market. It's kind of crazy because, you know, we were buying this thing at around, I want to say like $5. Let's go back to the bear market lows. I believe it was like $5. Yeah, it was close to $5. This is like $6. This is like $5 and like 30 some cents. We were buying around this level here. And it's kind of crazy that we were able to buy Chainlink around those levels because I always looked at Chainlink as an absolute giant opportunity in this space because if we go all the way back to like 2020 to 2021, a lot of people forget that back in 2020, there was a thing called DeFi Summer. And during DeFi Summer, Chainlink was one of the biggest winners. And in fact, back in 2021, Chainlink was one of the biggest winners in this space because, you know, again, it all depends on time in the market, obviously, but you were able to get Chainlink sub $1 at some point in time. Now, those days are definitely past us, but, you know, I look at Chainlink and I look at Hedera, and a lot of people think like, all right, well, these two are completely different. They're not really, you know, doing too much together, but that is completely wrong, right? And in this video, I actually want to address that because, yes, we are starting to see some big announcements, and I'm sure that you guys already see on the right side the Hedera Chainlink announcement. We're going to talk about that. But first, let's actually address the elephant in the room, which is, of course, institutional DeFi. JP Morgan put out a post talking about institutional DeFi, the next generation of finance. It fully breaks down, you know, how these DeFi protocols essentially are starting to take a hold of the finance industry in a big way. And this is all around tokenization of basically everything around us. And it's not just, you know, JP Morgan, Deutsche Bank, June 2024, the road to institutional DeFi, how decentralized finance can be used for regulated financial activities. And again, the entire landscape around these reports is focusing on tokenization. Even over here, this is from Northern Trust, the road to institutional DeFi. All of these major banks are getting ready. They are here and they want to embrace this technology in a large way. They are all preparing for institutional DeFi. This was June as well. All of this came out around roughly like June, July of this year. And again, 2025 is the year of regulations essentially. What does regulations do? Well, regulations opens up the door to institutions to fully embrace and utilize this technology, aka it's the floodgates opening. Now, if we go over here, we know Hedera is fully focused on institutional DeFi, along with other players in this space. Ripple has been going, you know, all in on institutional DeFi. There's a ton of players focused on institutional DeFi. Stellar's also focused on it. I believe XDC is also focused on it. I know that Quant has been talking about, you know, tokenized deposits and things like that forever. So this is definitely one of the hottest topics that is really kind of floating around the space right now. And if we go back to August, we do have Copper Integration affirms Hedera Network as an institutional DeFi leader. On top of that, we also have Layer 0 integration creates more opportunity for EVM-based institutional liquidity inflows to the Hedera network. Again, this is all based around institutional DeFi. And then last but not least, of course, we have the October 29th announcement with Chainlink, which was the HBAR Foundation joins Chainlink Scale with Chainlink data feeds and Chainlink CCIP being integrated onto Hedera. Now, we did talk about this because, again, even when you look at the full breakdown of this, this is fully focused on securing DeFi, making sure DeFi with the Chainlink data feeds is trusted. You can get that high quality data. You're getting those secure node operators. You're getting the secured decentralized network as well, the reputation system, all that kind of stuff. But when we look at the full breakdown of this, again, we're addressing institutional DeFi. It's all building that bridge to institutional DeFi. And we now know that even with some of the recent announcements. But what a lot of people forget is how long Chainlink and Hedera have been working together, right? Like if we go all the way back to 2021, Chainlink Labs furthers enterprise focus joins Hedera Governing Council. Now, we talked about this back in 2021. It feels like forever ago, but we're talking about 3 years ago. Next year it will be 4, but this was 3 years ago. And during that time, a lot of what we talk about today wasn't a big topic. Like tokenization was still very early. Nobody was really talking about tokenization in a big way. Institutional DeFi, we really were not talking about institutions at all during this time. I mean, we were talking about where we were headed, but today it's completely different. But if we look at the main topic of this, we can see companies to explore enterprise use cases, including bridging traditional finance to DeFi. And in today's world, what does this actually mean? Well, it means bridging institutional DeFi to, well, I should say institutions to DeFi, bringing home the idea of institutional DeFi. And now, with this recent announcement, which is this, we have exciting news. Chainlink data feeds and Chainlink proof of reserves are now live on the Hedera network. This integration takes transparency to the next level, enabling seamless access to high-quality, tamper-proof data and reserves verification, which is essential for building secure DeFi and tokenized RWA applications. Now, there is a full blog post for this, but I'm not going to go over. I'm not going to waste my time, and I'm not going to waste your guys' time. I want to go through all of the in-depth information that we are, pretty much hand-fed, if you will, from the HBAR Foundation, which is we're excited to announce that Chainlink data feeds and proof of reserves are now live on Hedera, paving the way for the next wave of institutional DeFi. There you guys have it, the big focus, institutional DeFi and RWA applications on the network. Chainlink price feeds provides real-time tamper-proof price data from multiple sources, enabling smart contracts to execute with high accuracy and reliability. This is critical for DeFi protocols that rely on price oracles for functions like lending, trading, and more. Proof of reserves give transparent on-chain evidence that a protocol or entity actually holds the assets they claim to. This builds trust, particularly in decentralized exchanges, stablecoins, and DeFi lending protocols or platforms, securing or ensuring institutions and retail users that their funds are secure. As DeFi continues to grow and traditional finance continues to explore Web3 networks like Hedera, this combination of real-time data and on-chain proof of reserves will bridge the gap between decentralized finance and the institutional world. Again, this goes all the way back to the original focus. I bring up this May of 2021 report, or announcement, I should say, because this is confirming that the same exact focus of even today is the same focus from 2021. This is how long these things take to, become a reality. And I'm very excited for this. I'm actually very happy about all of this. Why? Well, because we all know how big Chainlink is. Okay. Chainlink is one of the largest players in the space. I don't think that Chainlink actually gets enough love. Because again, it's a very large project. Everyone knows about Chainlink, so they don't really talk about it too much. But guys, we could sit here talking about XRP all day long, or Bitcoin or Ethereum. But why does Chainlink not get talked about enough? Why? This is one of the most bullish projects in the space. And working with Hedera, Hedera and Chainlink are literally going to power a very large portion of institutional DeFi, in my opinion, which technically goes back to the whole idea of, this new financial economy that's being created and this new financial system also. And you don't have to, believe me or listen to me. Just go look at the announcements with Chainlink. If we go all the way over here to September of 2023, we're talking about a whole year ago, bringing capital markets on chain with the DTCC and Chainlink. If we look at this, right, it is increasingly clear that blockchain technology is likely here to stay. With 97%, guys, this is what I'm talking about when it comes to regulations. 97% of institutional investors anticipating tokenization will evolve asset management processes and $100 trillion worth of assets in the US that could someday move on chain. Rather than embarking on a wholesale build of existing capital markets infrastructure, financial institutions are increasingly collaborating with innovative Web3 technology platforms like Chainlink to explore how capabilities can be embedded into their existing systems where possible to accelerate the real-world impact of blockchain technology in the global financial system. Our exploration in this space started with the collaborative work with Chainlink as part of Swift's interoperability project. Now, if you think about this, okay, Chainlink has already some of the largest players tapped into it with Swift, the DTCC, and all of this is to make sure that, capital markets, finance, traditional finance itself is all 100% bridged into DeFi as well. This is the video that was actually posted in part with this at the enterprise panel at SmartCon 2022, Bridging Traditional Finance and DeFi. This is with BNY Mellon, the DTCC, Swift, and Chainlink. What's crazy about this is that the DTCC settles $3 quadrillion per year in terms of securities transactions. And also, May 17th of this year, the DTCC Chainlink complete fund data tokenization pilot with US banks. This is with JP Morgan and even BNY Mellon. Now, I talk about this because guess what? The pilot program tested a method of bringing traditional finance fund data onto blockchains. Chainlink is the enabler of these blockchains and DLTs to be tapped in from the traditional financial world. And this is all for tokenization initiatives and DeFi use cases. Even down here, we could see the smart navigation pilot. This is smart nav pilot program. We could see validated a model for user interfaces and applications that leverage on-chain data, established automation of data routing through smart contracts to create dynamic data management across the lifecycle of assets, promoted a model that prevents future fragmentation through the use of Chainlink's cross-chain interoperability protocol, CCIP, limited impact to existing market practices and client-driven processes that enabling clients to leverage the same channels they do today, enabled clients to retrieve historical price and rate data without manual record keeping, simplify the downstream relay of price and rate data through the new interfaces for data consumption, and then also provided clients with the API solution to receive price and rate data. And again, if we're thinking about this, okay, all of the major players tied to this, like BNY Mellon, Franklin Templeton, Invesco, Edward Jones, JP Morgan, MFS Investment Management, Mid-Atlantic Trust, State Street, and even the US Bank, like all of these players are going to be utilizing this around tokenization use cases as well as DeFi. We even go over here to November 5th, which was kind of an update with this, but this was another one that was off-chain. This is actually to facilitate off-chain cash settlements for tokenized funds. Swift, UBS, Asset Management, and Chainlink successfully complete innovative pilot to bridge tokenized assets with existing payment systems. When we think about what's going on here, the whole path forward is enabling institutional DeFi through tokenized assets, because again, with tokenized assets, you want to get yield generation from that. You want to, buy, sell, trade 24/7, 365. All of this is going to be done by bridging DeFi to these traditional players. and Chainlink working with Hedera and furthering the network to make sure that it is fully, basically, I want to say capable, if you will, of not just, being fully secure and fully transparent and having the right data and all that kind of stuff. Chainlink and Hedera are working together to make sure that Hedera is at the forefront of the institutional DeFi wave. And this is also targeting the tokenization space because tokenized RWAs and DeFi go hand in hand. I talk about this a lot when it comes to the XRP ledger with Ripple, because these institutions, when they're going to start bringing things on chain, they're not just going to sit there. It's going to open up a completely different asset class. You're going to see passive income opportunities off of, tokenized RWAs being in liquidity pools or being borrowed against. I mean, this is definitely going to be one of the most exciting things that crypto has to offer. And it's all going to live on chain, but the most efficient networks like Hedera, like the XRP Ledger, Algorand, Stellar, etc., they're going to be the ones tapped in a large way. And Chainlink allowing for, these big things like data feeds and the proof of reserves to be tapped in a very transparent and efficient way. It's making sure that Hedera has everything it possibly needs to fully be, embraced around institutional DeFi as well as RWA tokenization. I do think that this is definitely going to accelerate institutional DeFi initiatives and adoption around the space. And I do think that all happens next year, especially with regulations on the forefront. And we also have a pro crypto admin, jumping into office around January, and we know Hedera is a US based company. I also believe that Chainlink is as well. So, this is definitely going to be a great, this is a great partnership, and it's going to be a great move for this entire space going forward, especially when we are talking about legitimization, utility also taking over, and just the overall adoption of these networks from the institutional side of things. So with that being said, I hope that you guys enjoyed this video. If you guys definitely leave a like, subscribe, notifications on because more free content. You guys are more than welcome to follow me on Twitter and join the free Discord in the description below. And with that being said, guys, it's been Nick. Thanks for watching. Peace out.